Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. So in this video, I want to do a stock market recap and update video. Basically, I only make these videos when there's something actually interesting to report. And I would say for the last maybe 6 weeks, the market's just been heading higher little by little. Obviously, in the past couple weeks, though, that changed relatively quickly. And so now there's basically a lot to talk about. So this one should be an interesting one. Let's go ahead and take a look. I'll start with the NASDAQ as I usually do. So basically what I'm looking at is long-term moving averages. So this is a daily time frame, the 50, 100, and 200 day moving averages. And so obviously right now we're losing the 50 day, which is this blue line. The only reason why we're holding right here, in my opinion, is because this is actually a pretty important level. So this level acted as resistance here in mid-July, basically, and then somewhat acted as support. One thing I want to highlight is obviously like there's moments where we get briefly above it or briefly below it. So that's something to keep in mind is resistance is not a dollar amount. It's a range. So it's not just like this exact penny. But basically you guys get the idea. So obviously this is a significant level and that's why we're holding. But in my opinion, if and when, I'm assuming that there will be a when, not an if. So when we lose this, I think the 100 day will be the next area of interest. And that's actually something that I called out in my last video. I've had a feeling that we would lose the 50 day. And so that's what we're doing now. And so the 100 and 200 are the next areas of interest. One thing I want to highlight here is that as I'm looking at it and as I looked at it today, if we take a look at the size of the move, the initial down move, so that's something like a 10% move. So a measured move from the top of the range would put us like slightly below the 100-day moving average. And that's like somewhat of a conservative estimate. And so as I'm looking at this long term, I can definitely see us getting slightly below the 100-day moving average as well. With that being said, I do want to make my strategy kind of clear right here. So I have bought at the 50 day, and I feel like it would be foolish to not buy at the 50 day. So I bought some at the 50 day, but I still have a lot of cash remaining. And so if and when, or if or when we get to the 100-day moving average, which is this orange line, I'll probably end up buying more, even if I think that may not be the ultimate bottom. I just feel like that's a pretty reasonable spot. And I'm not going to get too greedy with trying to time the exact bottom. I don't think this is a time where I want to be doing that. My idea here is that retail is actually bag holding right now. Like, if I can just paint a narrative real quick. So I would say that throughout this entire rally, actually, maybe even towards the beginning of August, we saw a lot of retail traders go pretty heavy in calls. And we started seeing less volume or less inflow coming in through dark pools and things like that. Basically, what I'm trying to say is a lot of retail started getting pretty heavy up here with really speculative bets, not just like buying Procter and Gamble, right? We're talking about buying calls on some of the larger tech stocks, and that's why the breadth of the market was so awful. I'm talking BREADTH, not like breath, but in terms of overall participation in the market, it's been awful. And so pretty much only a few tech stocks have been leading the way. You guys are probably already aware of this. You don't need to have me to tell you that. But yeah, so participation has been awful, and pretty much retail has started to get really speculative up here. And I think if there was some retail traders that all of a sudden got underwater as a result of buying up here, and let's just say that they didn't get completely wiped out, right? Because I know a lot of people got wiped out, but let's say they didn't get wiped out. Now they're bag holders, and now they're like, okay, I need to average down on my price. And so they're starting to buy heavy up here. But that's the really cool thing about basically big drops is that there's so much nuance to it, right? So the first drop is here, but the market's just kind of been bouncing pretty weakly, I would say, almost like just temporary consolidation before heading lower. But this initially, right, looks like an awesome buying opportunity. But keep in mind, like all we did was wipe out this parabolic move. So this parabolic move didn't really, create any support along the way. It's just like a last sort of attempt of basically FOMO manifesting itself. And so that parabolic move, if I can also share what happened here at the start of January 2018. So pretty much what happened here was obviously price is, respecting its moving averages. They're acting as support. We're having plenty of retests. So this is a healthy uptrend. But at some point, the train starts going off the rails and we start to have just really parabolic moves where it almost looks like the market goes vertical. And so that's kind of what happened here. Obviously in a different time frame though. And so let's go ahead and zoom into an hourly time frame, so you guys can see exactly what I'm talking about. So this is an hourly time frame, and this was my initial concern basically of the market kind of going off the rails is we stopped respecting the moving averages, just started going parabolic, and this kind of move, especially after the sheer magnitude of this move ever since March, right? Like how much has the Nasdaq gone up from from bottom? That was at like a yeah, basically like an 80% move. Like seeing a parabolic run up after a 70% move is not the kind of thing you want to see. That's not the place where you want to be opening up positions. That's probably a sign that FOMO is starting to really kick in. And so the first warning sign, and not just a warning sign, right? Maybe even a little bit worse than the warning sign, but the first bearish sign here was that we lost this key moving average, which has held as support throughout the entire rally. Not just the 200 period, but also the 100 period on the 1 hour time frame. And you guys can see this is basically the pandemic crash, where we lost these pretty quickly, and once we did, it was like off to the races. So this current drop has been a little bit more complex so far. That's not to say we won't get some bloody down days, but at least it's just a different character, I would say. Obviously, it's been a lot more choppy, and the difference here also is that we've now had 2 retests of this moving average, but it acted as resistance, recently as September 15th and 16th. And so once I saw this, I started to just slightly take off some longs, open up some hedges. Nice to see that the hedges are starting to pay off a little bit. And the other great thing, if you're a bear like I am, the other great thing is that now this moving average is starting to slope downwards, and that's why it's red here. You just definitely don't want to see that happening if you're a bull. And the shorter two moving average is starting to curl down. They're probably going to cross. If I throw on the 50, I'm sure we've already seen something. Yeah, so we've already seen a cross between the 50 and 200. And so now momentum is starting to favor the bears, and the bulls have a lot more to prove. And the cool thing about this is that considering how much consolidation has happened just below this, it's almost like it's building up a base for a nice heavy sell-off. And I don't mean like sell off to say that this is the start of a recession. I just mean sell off in terms of a good buying opportunity. But nonetheless, I think there is going to be another flush, and we'll go ahead and talk about price targets in a second. The last thing I want to bring up, which I think is also really important, and a really good learning opportunity, is basically we've just been consolidating sideways, for what is this, ever since September 8th, I would say. So we have this nasty 10% move, consolidate sideways, but consolidations sideways happen both ways, right? Like just because we're consolidating sideways doesn't mean we're going to break out to the upside, but this is a continuation, or sorry, this is like a setup for a continuation. And so obviously the trend was down. So this is like a consolidation, sort of digesting that. And since it's consolidating beneath this period, we're sort of building up like a base for another leg down, in my honest opinion. I could, obviously be wrong. And actually, let's talk about that right now. So if I was wrong, and let's say this is the bottom, I would still want to see us to recapture this level, right? Like that would be a continuation of the trend. Right now, it doesn't seem likely. That's not to say that we won't get some kind of bounce tomorrow or something like that. And that's not to say that we're going to have to go down immediately, but overall, this looks pretty bearish, I would say. And so let's go ahead and take a look at a daily time frame once again to talk about just price targets in general. So I am looking at QQQ because I think this is the best index. Obviously, I love QQQ. Most potential for gains is in this particular index. And so let me go ahead and just start drawing out some thoughts that I have in terms of places that I would be buying. Okay, so obviously the 100-day would be an area of interest. However, like I said, considering, you know, the size of the move, continuation, sort of building up that base for another leg lower, honestly, the 100-day is starting to look a little bit shallow. But I'm going to go ahead and say that that's probably an area where I will start buying. So from the close, that is about, you know, 5.79%. I'll go ahead and say that we'll round down to 5, and so anywhere between 5 and what would this be? It's probably like another 10%. I'm assuming, yeah, another 10%. So anywhere from another 5 to 10%. Basically, from where we closed today. Today is September 17th. That would sort of be my, you know, my place to start to scale into some longs. Why I like, so yeah, first of all, so this is sort of two estimates, right? The top of the range as at the 100-day, this is probably like a pretty shallow move, but a deeper move, and maybe one that I'm anticipating and hoping for, is one sort of at the bottom of the range, which was put us at maybe 11% from where we closed. And so why the 11% one, sort of why I like that one a little bit more, is because it coincides with all-time highs, and it would coincide with the 200-day moving average. So, but the reason why I consolidated both of those into one big box is just to say that, like, you know, when we're in this, I'm going to be buying, right? It doesn't matter. I'm not going to say, you know, I'm buying 30% here and then 30% here, right? I'm just saying, like, this is an area to watch, and we'll see how price plays out. I don't want to, you know, make too many false promises right here. That's pretty much what I'm looking at. So let's go ahead and take a look at the S&P 500, just to get a more clear picture of everything. So I already have a price target here, and pretty much similar picture. So we had to move down, really weak bounce attempt, probably just bear flagging for a continuation move. And here it would make plenty of sense to be, you know, buying up here. Anything as low as, like, I don't know, 300 would probably be fair game to start to get really, really leveraged. There's like a couple points I can make about, like, what happens if we get even below that, even below my price targets. So I would say I'm probably going to skip out on making that, just because I don't want to get this video to be too long. Yeah, like I said in the beginning of the video, this is not a place where I'm saying, okay, we're calling the top and a recession's gonna, you know, gonna play out after this. Like, I think this is gonna be a really awesome buying opportunity, and I'm looking forward to it. I'm personally very excited about it. Even if, like I said, even if we bottomed already, it's fine, because I already, you know, started to deploy cash. But I would, you know, I would be salivating to see another, you know, 6, 7, 8% down from here, which is kind of what I'm anticipating. So yeah, very exciting times, and opportunity to build wealth during these times. The last point I want to make is sort of just talking about retail in general and just news and the media. So I don't know what would happen with the media if we end up going down another 6 or 7%. I don't know if people are generally going to accept that, hey, this is a really good buying opportunity, or if this is going to be a place where people make the assumption that, okay, now the pandemic, you know, all the fundamentals that happened with the pandemic, now they're starting to kick in. You know, now, you know, we've kicked the can down the road long enough. Now all the unemployment is starting to catch up to us. And yeah, so I think it's possible that we have some of those types of headlines. Keep in mind, like, we don't have to have, you know, 30% drops in order to have sustainable rallies. Like, it's possible to have drops like these. You know, this is like a 10% drop or something. This is like another 10% drop or 8% drop. So it's possible to have these kinds of drops and still have really solid rallies, right? Like, I'm not saying we have to have total panic, total fear in the market, but I'm just curious and excited to hear, you know, what the narrative is out there if we do get another drop like I'm anticipating. And very last point is, as you guys can tell, I'm more of someone who likes to buy long term, or I should say, like, scale into positions rather than try to short them. That being said, I still have some hedges open, which are probably going to pay out pretty well if we do end up dropping. But generally, yeah, this is a good buying opportunity, in my opinion. That's not financial advice, and I'm looking forward to this. Hopefully, you guys can benefit too. And with that, I will see you guys in the next video.